Welcome, everyone, and thank you for joining us in space. Liam Flavel and Jesper Behrens are in the cockpit. Tomorrow, I can tell you that our space cadets will be Hans-Henrik Nielsen and yours truly, because it's a Danish show, so we thought it was fitting that Liam Flavel would be the first Irishman in space. It's interesting, Liam, there hasn't ever been an Irishman in space. Is that due to the restriction on guineas, or why is that?
It would. What's out there? We don't really get that much to do with vacuums, so that's just it. We'll stay on the Earth, I think.
Okay, we have one. The count is one for Denmark. We'll discuss what a potential SpaceX IPO can look like. It takes place on Friday. It's going to be super interesting, but also what inspectors actually will be buying, how the IPO process work, and what would happen when the stock starts trading. Is it going to go up? Is it going to crash? What do we think? We'll also take a broader look of the space sector, from Starlink and satellite infrastructure to launch providers, defense contractors, and some of the most interesting space stocks on the market today. Whether you're here for SpaceX or the wider or sort of broader investment, so to say, we are going to do a lot. We're not going to get through it all, but let me remind me that on MyStockScanner.com is a full SpaceTech theme this week. And Liam, you and Hans-Henrik have been diving into the stocks. And I know that tonight we're going to take a look at 10. We're going to do a countdown, just like Houston does it, 10 to 1. But we also have a couple of extras. And we're going to use our new tool, which is called the Stock Map. You better bring it up and explain it.
Let's just share my screen very quickly. If my mouse will wake up, let's go into my stock scanner.
There we go.
And there we are. Excellent. Okay, so we're at the platform at the moment, and we can see all the articles. We can see we've got a SpaceX webinar today. So just for people who haven't seen the platform before or are not too au fait with them, this is basically the landing pages you get to with our articles and telling you sort of what we're doing at the moment. The market scan is something that Hans-Henrik produces every day, which looks at the macroeconomic side of things and how that affects us. But what we're going to do, we're going to look very quickly at themes. So we can see we've had 4 themes so far in the last 4 weeks. We're 4 weeks in, and you can just go into the SpaceTech stocks and you can view all the information we've got up there. At the moment, we've got 2 main articles. We've got a load of stocks. I think there are 40 stocks in the theme this week, and we've chosen some of them from here, some of them for the webinar tonight, and we've added a couple more, and you can see their performance over time just for this particular theme and so on and so forth. And we have actually reduced them down into sort of smaller segments as well, where we can just see a few of them in there and see how they're performing. So that is that. But if we look at our new tool, what I'll very quickly do is go over to our watch list. So I've created a watch list of the stocks that we're going to look at today, and the new tool is called the Stock Map. And what this effectively does is tells us where in the process of going up, going down, going sideways, going sort of oblong and backwards a bit, a particular stock is. And we can see with the stock map that stocks tend to go around in a clockwise order as they become stronger, and then they actually start beating the index that we're actually basing the map on, and then they start getting weaker, and then they start dropping behind the index. So that's it. It's basically showing you the relative strength and the momentum of stocks compared to a particular index. And in this case, I've got the 11 stocks that we're going to talk about today. So we've got an extra bonus one just to practice and warm up a bit. And we can see that there are an awful lot of stocks in the green and the blue area, the red and the yellow. Everything's starting to go down that way in a trajectory, which is never good from a rocket point of view, I'm guessing.
No, it isn't. But it's interesting that they work sort of like they're in orbit, and the center of the universe here is the S&P 500. That's exactly in the middle of the map. So
Yep.
the further away the stocks are moving, the more speed they are having compared to the S&P 500.
Yes. So what we tend to look for is these smaller ones like Safran here, a French company, haven't really moved that much. They're sort of circling around the S&P 500 here. So they haven't really got that much momentum or that much relative strength against them. Whereas this one, if you look at Redwire, they've actually had quite a long, quite a big move in the same time period, because these are all over 8 weeks, I believe. So that's actually got a lot more oomph behind it to actually try and break orbit, I suppose, in this particular case. So.
It's trying to get out of the universe. That's what it's doing. But Liam, now we're already starting talking about the top 10 that we put together, and it's not a random order. We try to qualify them by getting better and better as we count them down. But let's just show, because there will be people along on this webinar that maybe is not familiar with what we do. One of our other tools is the 3-point playbook. And to warm them up, you have chosen a stock and take them into the 3-point playbook and explain what that is. The stock map we'll return to at the end of the show as well.
Okay. Yep. All I did was, to find a stock, hit the symbol search, type in either the ticker or part of the name or something like that, and it will find the stock that you want to find. We've got 80 odd thousand stocks in the system at the moment, so that we've got quite a few to cover us in every eventuality. And what we come down into is the stock page, which by default comes into the playbook page, and that basically gives us an overview. So we use the 3-point playbook as a guide, as a strategy to say when we should buy and when we should sell. So there are 3 different points that give us certain rules on whether we can go into the stock with the playbook rules. So the first point 1 is whether the stock is a high quality or not. And basically, we're saying we want to own high quality stocks. We don't want to earn rubbish, because actually it may go up, and there's a lot of rubbish that goes up these days. We'll talk about some of them on the webinar tonight. But when the rocket fuel hits the fan, as it were, the quality stocks are the ones that are probably going to stay up slightly higher, probably going to not drop down quite as much. You want to own quality. It makes sense because you want to buy into good companies. So that's the first one. We have a quality score out of 100. That's 86. That's pretty good because it's green. We also have earnings per share, which is green. You can see that these are the estimates for next year. These are the past historic ones. You can see that the estimates are growing with Lockheed Martin. And we've got the PEG ratio, which is basically how much of that growth in EPS is actually not in the share price. And anything under 2.5, which is where the center of this gauge is good, and it's right in the green here. So from my point of view, what I always say to people is I can tell within 30 seconds or 15 seconds, looking at this stock map, looking at the playbooks page, sorry, that whether a stock is any good or not, whether I want to be interested enough to actually go and do some more research on it, or I even want to scroll down the page. If those 3 metrics are good, that gets my interest. Then I can start looking at other things like the revenues. Is that going up? We can look at the analysts, whether they like it. We can look at analyst changes. So it's not gone up that much in the last 90 days or so. We can see return on capital and return on invested capital and return on equity are measures of how well a company, how profitable it is, or how much it turns with dollar of investment into profit. So that's been going down recently, and we've got various other metrics there. But generally, Lockheed Martin, generally in the green there, so pretty good.
And I'm gonna ask you, because Lockheed Martin, a lot of people, they go, I thought they were defense. I don't think that they were a space stock.
Yeah, no, they supply into NASA. They supply into the US government, which obviously has lots of space programs together as that are outside of NASA as well. So they provide something. I think we worked out between 17 and 20% of their business is actually space, and probably more than that, 25 to 30% is actually space related. So we've really aimed. So the bigger ones that we've looked at, the companies like Lockheed Martin, we've said they've got to have at least 15% in space that we can actually say, no, that's directly to do with getting something up into orbit. So that's the rule stick we used for that one. Point 2 of the playbook, the second question is it cheap? Because yes, it can be high quality, but if it's expensive, we don't want to buy it, because actually, who's to say it's going to, not going to go down immediately, because everyone else has bought it already. From here, we can basically use something called the value chart. And the value chart gives us, I'll switch over to the bigger screen here. The value chart gives us 3 particular lines that we can effectively line up with what's happened in history. And this is basically saying, okay, let's place the line pretty much at the top of where the stock has been and dropped, and then at the bottom we say, okay, we'll put it where the stock has bounced in the past, and then the blue baseline, which is what we think is going to happen, is sort of the line of least resistance between them. It's the one that we think is probably going to happen based on history. The reason this works is because we're saying, okay, at any given time, for a multiple of the earnings per share times the PE ratio, which is how you calculate a PE ratio, it's price divided by earnings per share. We just twist the maths around a little bit. So we say we'll multiply these two together and come up with a future price. So analysts think that in 2027, the company is going to bring back $32 in earnings per share, and they think it's going to be at a P ratio when it ends at 20. So that effectively gives us a terminal price of about 610, something like that, which is what we think is our worst case scenario, because that's the point in the past where investors have said, that looks really cheap, I'm prepared to pick that up now. They have bought at a lower price in the past, so you can actually go down, and this is where your risk tolerance and your expertise comes in. But generally we try and favor the more recent history compared to the older stuff. In the same way, the green line, the bull line, actually says, okay, this is where investors have said, no, that's enough, I'm going to take some profits, and they're the points where everything drops. That gives us a potential 61% return against a bear case of 21% return in the worst case scenario for holding it for 18 months or so to the end of next year. And our blue line, which is where we think it's probably going to be, 35%. So we can say that actually, down to our valuation, we think Lockheed Martin could be up by 35% next year. That's our guess. And what we try and do is that if this is negative, the negative has got to be half what the potential return is. So we're basically loading our odds so that we have a 2-to-1 or more risk reward ratio, so that if we get it right, we really get it right. If we get it wrong, it minimizes that.
And again, just to summarize really quickly, the green line is the bull case, so to say.
Yep.
The red line is the bear case. That's the worst case. And the blue line is what we think is going to happen. And the reason why we're spending time on this right now here in the beginning of the show, before we talk about SpaceX and everything else, is this is the parameter that we're going to use for every single stock that we take up in the top 10. And Lockheed Martin serves as an example of that.
Yeah,
see, now we had two of the three things that almost makes us buy. The last one, you're
yeah.
right at it.
Last one is the one that says no, we wouldn't buy yet. This is it a good time to buy? That's our third point. So we do basically, we only want quality companies. We want to get them when they're cheap, not expensive, and we want to buy when they're in an uptrend. So this isn't rocket science, literally. This is basically, let's buy cheap stocks that are good and it's still going up. In this case, we can see it's not going up, and the reason I say we can see that is just hide the super trend, because it doesn't really belong on here at the moment. We have a number of ways of doing this. We have 5 indicators on here. We have the SMA 200, so the simple moving average for the last 200 days of the closing price is down here. You can see the stock has tracked it, but it's really had problems going up above that. So it's tried to get up there and been rejected. So knocked down again. So until that actually makes a meaningful break above the 200 and also above this green 50, we wouldn't be interested. There are certain times where we've sort of taken a bit more of a guesstimate at this with a couple of stocks recently, and one where we got sent out of, another one close to at the moment. But by and large, everything's got to be above the SMAs. We have down here the MTI, which is our momentum trend, MyStockScanner trend indicator. It spots momentum, and basically when it's in the green and double green here, this is the weekly at the top and the daily at the bottom, we can see that the stock tends to go up. So this is the indicator that we use. We're just going into green on here, but it's not green on the weekly. No, it's not green on the weekly yet, and next week it's not looking like it's going to go green either, because that's our guesstimate on what's going to happen with the information we've got. So until we sort of saw a big boost up here, then we wouldn't be that interested in stock. And the final one is one that we've recently bought in. It's called our MTX, and it's, again, like a rocket. It's an explosive indicator, and it basically tracks about 5 or 6 different metrics and gives us a good timing indicator to say this stock is just about to explode up. And we haven't got stats on this yet. It's still relatively new. We've been trying it out for 6 months ourselves. Our members have only just got it, or 2 weeks ago, something like that, 3 weeks ago. But it's been very, very good for us. And we've got a portfolio running for the last 2 months that's up 8%, something like that. So it's pretty good. So all these indicators we tend to combine. They don't all have to be absolutely perfect. In a best world, you would wait for all of them.
Yep.
But in some cases, with something as slow, sometimes a 3-point playbook, the MTX might have come and gone. And you're only in the middle of it here when the 2 greens on the MTI come in. So it's something that we that's what we educate people about is, okay, when's the best time to go in? Do you need all of them in green? How do you do this? And that's where we've got an awful lot on the system, and we do a lot of education on that.
See, that was a quick intro, as quick as we could, because we also want to make it so you understand what's going on about our 3-point playbook and the stock map. We will get back to the 3-point playbook all along the 10 stocks that we're going to talk about. But we're also going to talk about what is it that you buy when you buy a SpaceX stock on Friday, if you can. Because the question is, right now, the stock is what's called oversubscribed. And Liam, let's start with that before we get into the top 10. The SpaceX IPO is oversubscribed. What does that mean?
It means too many people want it for the number of shares that are out there. So you tend to, with an IPO, the IPO means initial public offering. So it's basically a company coming to the market for the first time and saying, we want to raise some money and we'll give you shares and they should rise in the future. And this is our business case. That's what SpaceX have done. SpaceX are trying to raise $75 billion. They've set the price at $135 per share. And they've given around 65% to institutions. So that's banks, that's investment banks, that's merchant banks. So that's bigger institutions like Warren Buffett's or the company or his ex-company now. So they've given them the option of buying. 35% is allocated to retail. And that means that you can go to your broker at Nordbank or Interactive Brokers or something like that, and you can actually subscribe for shares. And you can say, I want 100 of those shares at $135 so that they're actually in my account on Friday when the market opens. So that's how it happens.
But when it's oversubscribed and you have signed up for 100, you might not get 100.
Well, what happens is Elon Musk personally goes through each one and says, I don't like him. I do like him.
That's why we're not getting any.
He's Democrat. He's not going to get any. Yeah. No. Yeah. There is a system that actually attributes sort of the shares and just ratios everyone down. There are different ways of doing it. So, and it's a lot of the information around SpaceX and this IPO is difficult to get into and difficult to find. So it's that's one of those things. But yeah, $135 a share, and there are quite a few shares going, and that's the bit that's oversubscribed that people are saying actually we could probably sell 150 billions worth of shares.
But doesn't that just mean that as soon as the stock hits the market, then the price will go up if it's oversubscribed? Can't you conclude that?
I mean, yeah, you can conclude that. It'll be interesting. It's a bit like anything else. There is a lot of smoke and mirrors in this. The job of the banks that are running this auction effectively, and the IPO process, it's their job to whip everything up into a frenzy. There are plenty of examples of IPOs going straight through the roof, and there are plenty of examples of IPOs crashing and burning.
But what if, let's just for argument's sake, and we will get back to it again at the end of the show, talk about SpaceX itself. But let's just say that I have signed up for 10. I only get 5 because it's oversubscribed. Then on Friday, can I sell within the first minute if I see the stock jumps?
If you're not someone who's got a lock-in on the shares, which you won't have as a retail investor, almost certainly, then yes, you can. So
So
that's
that
as
means
simple as
you
that.
can make an instant profit within the
Yeah,
first
if
minute
it
if it.
goes up. Yeah. So
Yeah, exactly.
the bank's getting 65%. So the roadshow that's been going on for the last couple of months is Elon Musk taking his whole roadshow around all the banks and saying, "Look at us. This is our plans. Believe us. When we're going to we're going to do this, that, and the other." And they say yes or no. And there are some banks very publicly that have said, "Yes, we think it's a brilliant idea." And there are other banks that very publicly have said, "We think that's the weirdest and just the most ridiculous thing we've ever seen." But they've convinced a lot of banks to take up that 65%. So they're going to be paying about 50 billion, something like that, into the funds over there. Um,
So
so
we
they
will.
have the option of doing this.
Okay, and they can sell as well, or what?
They can sell as long as they're not in a lock-in period. A lot of the
Yeah,
previous shareholders will be in a lock-in period. So Elon Musk probably won't be able to sell for 3 to 9 to 12 months.
whatever he has. But no doubt, I can look into the future, and I'll show you what Elon will look like at 10 o'clock Danish time on Friday. I have a wait for it. Here it comes. He's going to look like this because on Friday, 10 o'clock, when the market closes in the US, he probably will be the richest man in the world, won't he?
Yeah, probably. Is he happy though?
See, now we're going to make a lot of people hopefully happy because now we're going to go into the space stocks, 10 of them. We're going to do a countdown of space stocks now. We're going to start a little bit in the, can we say, Liam, lottery end, sort of lottery stocks, because a lot of the space stocks, they are really hoping for things to happen. They're not really they're not in business. They're not making money yet,
No.
but they will in the future, hopefully.
That's what they say. That's what they
Yeah.
say. So this is something. So we've got a mix here. We've got some really good playbook stocks. They're going to be high quality. They're going to be cheap, and they're going to be, potentially in a good time to buy. Certainly two of the three. Um, we also have some hands when he was going through them with us, termed them lottery tickets, because I don't think he could spell shit show on the on some of them. So some of these haven't made money yet, effectively, and that's what we look at. And we tend not to invest in those from the playbook point of view. We do have our MTX portfolio itself that is more short-term swing trading, which we can invest in anything, and we have made money out of these stocks. So it does go both ways, and we can. But if we're purely looking at them from a quality point of view, starting with Planet Labs, then that's the first lottery company that is in there. So effectively, Planet Labs, it takes photographs of the Earth from space. It's they're given to analytics companies, they're given to the intelligence operations of government. So they've got both commercial and government clients. So they've got a unique historical data set that no one else has got effectively. Even Google haven't got that sort of thing. The problem they've got really from business is that they've got, the satellites aren't cheap things to either make or get up in space, though part of SpaceX's role is to reduce that cost down. And they don't actually make any profits. That's the second thing that's sort of missing. So from a playbook page point of view, you can see the quality score 21 out of 100. So that basically ranks all of the 6,000 stocks we cover in the US. This is a headquartered in San Francisco, California. You do get a blurb up here as well of what the company does. That's a standard one that comes out with all the data sets that we get. So, but you can see here from the earnings point of view, we've got lots of historical ones, and they're actually in the minus figure, and we've got no future ones that the analysts are estimating. So there's not much analyst coverage here. Everything else is red and is negative, so they haven't actually made any profit. The thing that's brought them in, and we've been kind to them, is that they're actually generating some free cash flow. Free cash flow is effectively the amount of cash left over in your bank once you've got away, actually counted off all your operational expenses, capital expenditure, and things like that. So free cash flow, you can manipulate earnings with various different accounting techniques. Free cash flow is much more difficult to manipulate, and it's one we do look at a lot, because if a company's got strong free cash flow, it can actually start investing in things.
And the thing is that, again, we want to underline here, these are stocks that are higher risk. They, of course, also often have a higher potential reward when it
Yeah.
comes to it. See, it's disqualified basically on step one. What about step two?
Step two, because we haven't got any analyst estimates, we actually have to guess where they're going to go to. So this is where they've had a meteoric rise up here, and they've dropped that back down quite quickly as well. So, but they've had a meteoric rise simply because people think, with the situation of various wars around the world at the moment, their requirements for their kind of specialist data is going to be more and more. So that's why these guys have gone up, and also they've gone up on the back of basic space. Yeah, there's
Yeah.
a lot of money coming out into this industry, and that's what people are really starting to invest in. That's what the interest is at the moment. Is if there's money flooding into this sector, it's probably going to float everyone, and it will float some stocks from some more than others. And that's really what this webinar is about tonight: is to actually pick the ones that have less risk attached to them, and Planet Labs is not one of them, but also the ones that could actually go up.
Then let's go to step 3, because we can't really do anything with step 2. But here we go. See, the thing is that we can see them on the 50-day and the 200 days. We can
Yeah.
also see the momentum that you're talking about, the MTX.
Yeah. Yeah, so the MTX has kicked in a number of times over since June last year. So it's actually given us those signals to say, actually, now might be a good time to go in. Okay, if you haven't gone in, now might be a good time to go in, and so on and so forth. We could have picked it up. This is where combining all of these different indicators together works so well, because you don't just trust the MTX, you don't just trust the MTIs, you actually trust all of them together to say, it's above the 50, it's above the 200, everything's green, the MTX just kicked in. That's 5 really strong reasons why it's a good chance to get in. And you could have done the same thing pretty much at any time over the last year, and you would have got the same result. And we can see we're just dipping down into red just on this day here on the third here, which is a warning sign. We wouldn't have taken it. We probably would have come out somewhere around here.
Yeah.
But that's the strength. So the exit rules on the 3-point playbook are pretty much the opposite of the entry rules. If it drops below the 50-day or the 200-day, definitely, then yes, it's a candidate for, we kick it out.
We're going to jump to the next one because we're in a hurry here. We're on a countdown. We're going to go to number 9 on the list, and we're coming from satellites now into launch service and spacecraft craft development, because we're going to go to Firefly Aerospace, and it has the best ticker ever, FLY, fly. Come on, you can't get better than that.
Yeah, I don't know, Dong. One of our personal favourites, but that's yeah. I won't go into why I like that. Again, Firefly is in our slightly risky category and lottery category here, because again, it hasn't made any money. We have got analysts here that are saying actually this year it's going to make even less money. It's going to make more of a loss than last year, but then start moving up towards profitability. Their revenues are going up. You can see that down here. Quality score is not great, but that's basically because of the earnings per share. Everything else, they're not making any free cash flow. If you want more information, we can click into the summary and we can actually see the figures behind here. So you can see the profits, and you can see the analysts sort of pushing them, or the net profits, and the analysts suggesting they're going to be pushed up. You can see the earnings per share, and then you can see all the other information that we've got. As we get into the stronger, more established companies, all this information will flesh out, and will be easier to see. The big things that we often look at on here are things like the capex. How much money is the company spending to invest in new products, new buildings, new plant machinery? Because sometimes that's a fantastic thing, because the company is investing in itself to grow. Other times, when you look at the big AI boom at the moment, then actually you're wondering, are they ever going to get that money back, or should they just burn it? But in this case, they're investing quite a lot of the money they're getting straight back into just generating whatever they maybe more designs and things like that. Firefly itself, their strength is in demand from the Pentagon and Northrop Grumman, their partnership with them. So they basically focus on lunar missions, medium lift rockets, and things like that. The problem they've got is a bit like SpaceX and the New Glenn orbiter that blew up last week. When a rocket blows up, it tends to be really, really expensive.
Yeah, and it gets messy. But that's step 1 again. If we go into the valuation, I can almost guess we really
It's
don't have
negative.
any.
Yeah,
We don't
we
have
could.
any
Yeah,
indicators.
we could fill in, but at the moment, 30, minus 1.3 times 16 is a negative figure, so it doesn't
Yeah.
really work out until the company's profitable. From a pure 0.3 point of view, it's just dropped down away from its buy zone. So it was, again, not quite as good. We haven't as many MTX indicators compared to Planet Labs just now, and it's only really recently sort of gone into IPO last year. So these guys IPO'd last year, and back in August. It's just dropped down below the 50. We haven't even got all the data that we need to have the 200-day moving average painted yet. So not something that we would look at.
And you can see the IPO, it went down after the IPO. But let's leave that alone.
Exactly. Yes.
Let's go to number 3 on the list, Redwire Corporation, a space infrastructure and engineering solution. Again, we are in the lottery department in that sense that these are things where money have flown into lately because of the interest in space that SpaceX has generated. What kind of company are we looking at here?
It's a company that dropped 15% last night.
Yeah.
So, which is an interesting
Ouch.
one.
Yeah.
Um, they make infrastructure, so they're a little bit different from the others we've looked at the moment. So they supply things like solar arrays, sensors, and other satellite components out there. So they're looking at providing the tools, the picks and shovels, as it were, that the satellite makers actually need. So they're essential components. So that's their strength. They haven't got that many customers, and if they come under some inflationary type pressure, then they could be under quite a lot of trouble, because at the end of the day, let's just minimize the Explorer, they've got quite a low quality score. Again, that is because the earnings per share is not great. Their revenues are building up, so they're not too bad. Everything else, free cash flow took a massive dive recently. Their interest coverage, so their debts are huge. So if we just jump straight back into the summary again very quickly, we can see a bit more. They've got more of a trading pedigree, definitely. So they've been around for longer. Um, but if we just drop down here, we can see their gross margins are not that great, and their operating margins are negative, which means for every dollar they spend, they actually lose 76 cents. In return for that. So that's not a great thing. Their capex is fairly stable, but it's grown quite a lot for the last few years. But the big one here is the interest coverage and the amount of debt that they've got compared to the assets on their balance sheet. So that's a bit of a problem that I'd highlight on here. So it's one that we'd immediately say it's not massively great quality. Again, it doesn't make any money, so it's very difficult for us to value just on a more traditional basis. And again, that 15% drop, they were going absolutely fine until last night, well, about a week ago, I suppose, and then everything started crashing, burning like the rest of them have.
Is it because the people are taking money out of stocks like this, like Redwire, like Firefly, and getting ready for a SpaceX? Do we have a sense of that?
We It's a logical thing to assume. So if we look at the three big IPOs and Google, and Hans Henrik talked about it in the market scan this morning from a macro perspective side of things, we're looking at this year $500 billion dollars being allocated to Google, to SpaceX, to Anthropic, and OpenAI. Um, when the market is something like 70 trillion, that's 5 to 8% of the market that is suddenly having to find more money to go into
Yeah.
here, because SpaceX is being put into the Nasdaq immediately. The S&P 500 said, no, we've got rules. You've got to be profitable for a start to get in there. But the Nasdaq have waived those rules, and effectively that means that all the ETFs that track the Nasdaq
They
100
have to
stocks,
buy
they have to buy automatically. So they have to sell their other stocks, a percentage of them, to do that. So
to
that's
make room simply.
so they've got the funding and the cash, because basically everything has an allocation. So if you look at the S&P 500, the Nvidia's somewhere around 4%, 5%, 6%. So that's going to be knocked down. So they'll be selling Nvidia as well. So it's not just the smaller guys; it's everyone will be moved around because the percentage allocations
Yeah.
change. Also, if you want to buy a stock, if you're 100% invested at the moment, you
You
will
have to
need to
sell.
sell something
Yeah.
to buy this. So this is part of what we see at the moment. The other part of it is it's not a happy world out there at the
No,
moment, and
no.
people are nervous.
We have 3 more lottery tickets for you, so to say. And I'm sorry if somebody takes offense that I call them lottery tickets, but we're going to talk Voyager. We're going to take Luna. That's the ticket for that. And then one of the big ones, AST Space Mobile. But first, at number 7, it's Voyager Technologies. What kind of company are we looking at?
Yeah, it's same sort of thing. The analysts are projecting a big loss this year and a slightly less big loss next year. Quality score isn't great because we're in losses. We haven't got a PEG ratio. Revenues, like with everything, are growing. So these are companies that are getting bigger. Not massively healthy. This is a gauge called the Petrovsky F score, which is, he was an accountant in the late 90s that came up with 9 questions to ask to come up. So that's 3 out of 9, which isn't great. Analysts have loved them over the last year. They put them up 160%. So that was, this was actually even lower, which is crazy. And they're burning through cash. As a company, they build space stations, and since we've only got about 2 or 3 up in orbit and none of them are theirs, then that's why they're losing money. They've got a partnership with Airbus, sorry, so that are trying to build a space station up in orbit. So they've got the Airbus backing, which gives them some credibility. And there's something called a European customer trust that there's quite a lot of people that sort of like them and use them and are behind them in here, though not necessarily with a huge amount of money. But the space station costs are humongous, which is a very technical word, which is why we're seeing this big burn in free cash flow down there. From a valuation, again, it's a lottery ticket. We can't value it. From a pure 0.3 basis, we are looking at is still in an uptrend. We got a buy signal down on the 8th of May, so about a month ago, and that would have taken us up quite nicely. We got a double green down on the MTI here, so we potentially could have got something like up at the top, 53%. Even now, you're looking at 20% gain. Even after yesterday's 15%. So it's probably, we're creeping up in the quality, shall we say?
And again, one of the things that is so interesting about these stocks is that you can play the game. You can actually make money from this, and we're gonna go to another one. And now you said we're talking satellites, we're talking space stations. So we're coming up on again a good ticker. They really have their way with the tickers at the moment. Luna, Intuitive Machines. It's a name that's been, I'll say, fairly popular. A lot of people, I've seen it in recommendations many places, especially on social media, because they're really good at marketing themselves.
Social media is where you want to get all your information.
But they're really good at marketing themselves, and that's where a lot of people meet them and see them the first time.
Yeah, no, it is. So actually getting, finding out about these things, we rarely get something on social media, apart from obviously our members group that is particularly interesting. But there's a lot of people sort of, I haven't actually heard the phrase "to the moon" that much in the last 2 weeks, which is really odd because you used to hear it and get annoyed by it all the time. Luna is another infrastructure company, so it's looking at delivering payloads, communications, rovers, and things like that for NASA's moon missions. So they've got proven sort of technology that's been used because they're NASA's preferred partner for this. The danger is failures and things like that. Again, this ranks in the bloody expensive side of investing in technology here. You can see that the quality score is actually really high compared to a lot of the space stocks we've looked at recently. So a 39 is actually almost nosebleed territory, and they're almost making money. It doesn't take much. If they've just put a bit more effort in, maybe then they'd do it. But effectively, that's because their revenues are starting to shoot up. That's what the analysts are expecting coming out. We can see that the return on investment capital isn't that great. Return on capital is a bit, free cash flow is negative again. So overall, it's something that it's not something that we particularly want to pick up on purely from a valuation long-term investment point of view. Their capital expenditure is actually coming down. So 2 or 3 years ago, it was at 142 per share, and it's now down at 0.31. So it's coming down on the right trajectory there. Maybe they've gone through their initial burn to actually get this stuff out there, and they're looking to minimize that capex, because at the end of the day, the capex negative means that either the company has to go into cash reserves, if it hasn't got cash reserves, has to borrow the money, or go and do a secondary offering, which is like an IPO, but it's just coming back and saying, we need some more money, please. And that can be either well received or not well received.
But interesting here in point 2 is that they made money at one point.
Yeah, I mean, I don't know if they made a mistake and just said we won't do it again. Don't worry.
Forgot to use money at one point.
So you can, and this is where the value chart comes in. It actually starts giving us an idea of where people have invested, at which levels people have invested, and where they've come out and where they've come down. So it's an interesting one, but not that interesting because they're not they're not slanted to make any money for a while. And we can see down here that, I will save that next time we come out, we can see that it's just broken the SMA 50. So again, it's been in a good trend. Yeah, you can see that here. Yeah, we could have got it here, and we could have, would have come out. We probably would have still stayed in it all the way
because
along
it was
here, and then
hanging
it
on
shot
to
back out.
the 50
Yeah,
50
so
day moving average.
it's not like a switch where it goes below that. Often you see a stock dip a little bit more and then bounce back up. So it's something that we tend to look at, and that's where the support and resistance line, these green bands here, comes in. They get painted when something acts as a point where the stock is either hit and then bounce back or gone the other way. So we've got green and red ones sort of that get painted on here. It's just dropped down below its 50. Didn't have a particularly good day yesterday. We can see it's -7%. So everyone got hurt. So we'd have been, the reason the super trend comes up is that we've recently been using it because everything's so high. This gives us a true range, the average true range of the stock over 14 days, I think, or 10 days, got it set to, and it's 3 times that. So this is often closer than the 50, and we sometimes use that as this is one that right now is dropped out. It would have been a really good run, getting into it somewhere around here, everything green, taking the run up, and then sort of deciding when you want to come out up here.
We are counting down. We're coming to number 5. This one is almost, I'm almost going to say, a household name when it comes to space, because it's one of those names that's been around for a little while, and it's been featured on a lot of different blogs for sure. AST Space Mobile, it's space-based cellular broadband connectivity. So something that's, I'm almost going to say, usable for all of us.
Yeah, definitely. Apart from that, they don't make any money, but this is the interesting area. This is where SpaceX, for me as a techie, comes in sort of in the interesting bracket, because actually one of their biggest areas, that in fact probably their only area that they make money on at the moment, is their Starlink service, and that's got a huge amount of press. And AST is doing something similar. They're looking at satellite smartphone connectivity. They're looking at building up a cell network off of low Earth orbit satellites, and that gives you very quick or very low latency, as it's called, so very quick transmission times between the satellite and you, and also down to the other end where you want to actually make that call to, or make that data connection to. So that's what they're trying to build. There are a lot of companies doing it at the moment, and you wonder whether they've got the pockets to actually compete.
Because that's the thing right now. It's basically a survival. It's almost Hunger Games here. How long can you stay alive when the switch happens and you start to make profit, because there's so many fighting to stay alive that long?
I think that's it, and I think probably the best Christmas present last year was when Starlink turned off some of the service to some countries for no real reason apart from political ones. So that's automatically made the European Union, the UK, and people like that turn around and say, actually, we can't trust these guys are going to be there when we absolutely need them, and we don't want to give that sort of power to them. So coming up with a plan B, and that plan B probably shouldn't be Jeff Bezos with Amazon, because they're doing the same thing with their projects up there. So actually looking at the other people is an important part. These guys are still in the US, so I would say they won't benefit as much from that push, but there's certainly cash there to do it.
But let's do them quickly, because we have 4 more stocks to go, plus we need to talk to SpaceX, and hopefully we can do it all within the hour. I think it will run a little late, but I'm going to speed up Liam here
Okay.
and set him into orbit.
All right. As usual, hadn't made any money, so there's a lot more green on here though. So it's actually looking like it's moving in the right direction, but they still haven't made any money, and free cash flow burn is awful. So wouldn't look at them. Valuation chart is going to be useless to us because they haven't made any money. We can't value them. They're actually just bounced yesterday on the 50, which is really interesting. So they dropped 3%, well 3.5%. So they didn't quite take the pain as much as the others in their peer group did over the most recent times. But it also hasn't had that stratospheric rise. It's been a very messy up and down here. So it's one that we've just gone into red, double red on the MTIs. We're in a downtrend. It might this might bounce and then the MTIs come back in, but still one as a swing trade, as a short-term trade, if you like it. I think there are probably better ones than this. There's probably more risk in here because of that cash burn that they're going through.
We're going to go to now what we call a hybrid growth opportunity. It's a combination of established revenue streams and strong growth potential through launch service, satellites, and space system. We are going to talk Rocket Lab now. Again, fabulous names. They're really good at coming up with those names. And the ticker code is RKLB. Are we getting closer to something that can make money, Liam?
No, not really. Sorry to sound like a broken record. Um, it's maybe we found where they're actually spending all their money, and it's on the marketing guys coming up with the names for the tickers. But
Yeah, it could be.
the quality score isn't getting better. The revenues are. So the revenues in these companies are getting stronger and stronger, which is why they're further down or up the chart and compared to some of the others. But they're not looking at making any money, though. They're not losing as much money. Everything else is sort of going greenish until you get to free cash flow and the burn's going through again. So Rocket Labs it's a launch and satellite company. So that's what they do. They have something called a neutron rocket, which sounds really sexy and just goes to the inner geek for me. But they've got a proven launch record, and they can compete with other people in putting cargoes up into space. But any delays in their rockets coming up, the neutron sort of process and getting that rocket there could be very financially expensive, as we're seeing from the free cash flow burn here.
Yeah.
So they haven't made any money. We're not going to use valuation chart for that, but what we can do is see what they've done recently, and you can see that actually they've been on not bad. It's been quite up and down. So yeah, we could have come in here with double green and the MTX sort of telling us we're going in above the SMAs there. That then dropped, and the next time to come in was probably maybe somewhere around here, and then follow it back up and then back down. But it's been quite a volatile move up there. In the last few weeks, it's gone up. Yesterday, again, it took a bit of a beating at -5%. Not as bad as the others. Still technically in an uptrend. So the daily has gone, but next week is still green. So actually, yeah, it's in an uptrend. So from a swing trading, could be we wouldn't buy it now. We would much prefer to buy the beginning of an MTX sort of exposure there, but it would be interesting.
We're going to go to the top three now, and now we're coming into the quality space stocks in that sense that we see them as strong competitive advantage over the stocks that we presented so far. And this is going to be a little more like names that you probably have seen on your news side, in that sense that companies like Safran, the French company that we're going to talk about now, a leading aerospace and defense company with a very strong position across multiple markets. This is a different ball game now.
Yeah, I mean, it's nice to just talk to someone. Someone's got some cash and they're actually making some money, isn't it? Yeah, as you say, they're European. They've got sort of quite a large space side of things for this because they specialize in propulsion and defense electronics and things like that. They are, being a French company, the government are quite well behind them and they back them. I probably shouldn't say too much about that, but they've got a lot of protection from the French government, put it that way. And also their other cash flows protect them from drops in the space industry if something bad happens. So it gives what these next ones that we're talking about give you is basically stability. What you lose there is the potential growth.
Yeah.
But
And
we're in.
you can almost see it just from the little bit of you show of the playbook
Yeah,
right now. When you look at the revenue, it's chucking up nicely.
yeah, yeah. But it's got a premium sort of price tag. It's quality, really high quality is absolutely great. The earnings per share is dropping from last year and then going back up, which is not a sign that I particularly like. Because of this drop, we haven't got a PEG ratio. Everything else is pretty green, and this is a thing of beauty. That we haven't seen
Free
anywhere else.
cash
So
flow.
is producing cash. So that's a great thing because that means they can carry on investing. And that means they can survive. They've got that that cushion that allows them to protect themselves. Price to free cash flow we can talk about now because they're actually making some of the bloody stuff. We generally want that below 35.40, something like that. That's literally price divided by the free cash flow per share, and the lower the better. It's a bit like the price to earnings ratio in that regard. So below 35 is always a good way of looking at things, and the interest coverage is great as well. From evaluation, we can actually get to play with the valuation chart here. Regular people that watch us and listen to us know that this is something we don't particularly like because what the company and the analysts are saying is basically it's gonna go up. again, don't worry, but trust us, it's going to go up. And a lot of the time, it actually doesn't. So, yeah, that's something that we always take with a pinch of salt. And I'm just going to move these down because actually they were way too high, where the system put the default. So it automatically makes it look like a much worse picture, and it makes it look like it's expensive, which it is because it's had a hell of a run since 2022. We can see sort of that price increase. So for us, there's an upside of 2% if we get it right. There's a downside if we get it wrong of minus 20%. So it's one
And
that we'd
that's where we say
automatically,
we say
yeah,
ouch. Now I'm
yeah.
going to be interesting in the timing of this because of course again like we've seen all the stocks really having trouble lately because maybe because of the SpaceX IPO and people are taking cash off the table or moving them towards that. It looks different here.
It does look different here, and this is something that actually we've scratched our heads, the three of us in our meeting, saying, well, the world is obviously a lot more calm, stable, less likely to erupt in war at any time. We haven't just shot 80% of our missile load in the US at Iranian targets, and need to rebuild everything. So obviously all the big defense stocks are going down. It's a crazy thing. They
Yeah.
were quite highly valued in the first place if we just go back. So they've been on a hell of a run recently, especially this particular company. But so that's probably what's happening here,
Yeah.
rather than the space side of things. But from a technical point of view, we wouldn't go near them because it's come up to the 200 and it's pretty much been rejected. It had a valiant attempt to shoot up here and then got knocked down again. So until we see some green down here and everything else starts stacking up, then not something we'd be interested in.
We're going to go to, I'm almost going to say an American counterpart in that sense, because we're going to go to HEICO. HEI is the ticker code for them. Again, a highly profitable aerospace supplier with a exceptional long-term growth record. So they know how to make money. They are number 2 on the list. Liam, run through it like it's, imagine the engine is on right now. You're sitting
Okay.
on the fire
That's
pad
fine.
here.
Well, what I'd say is it's going to be a rubbish company because they haven't spent any time on marketing for their ticker. HEI is nowhere good as Rocket Lab. So you can see why they're not doing as well recently. But
But
this is the power of the playbook. So you can see here, everything that we see on the screen is green. You've got a 93 quality score. Earnings is going up beautifully. You've got a PEG ratio that's below 2.5, which is just in the green there. Revenue's going up. Free cash flow, again, another thing of beauty. Everything ticks the boxes in there. So awesome company. Why wouldn't you want to own that? And it actually is giving us a really good set of trading signals here as well, because you can see even going back to 2021, you can see where it bounces and you can see where it peaks. So you can see obviously where the investor appetite goes in and where it comes out again. So that's what we're looking at. On here, if this is one that I set up earlier, we can see that in our worst case scenario is a 9% upside, and the best case scenario is a 48% upside. So happy days in either of those cases. Analysts think there's 20% between here and next year, and I reckon in the real world, 33% is a good indication there. So
see, now
fantastic
I'm
company.
getting super excited because now I just want to know if the timing is right.
The timing, yeah, that's where it's just bounced up above its 200. Everything's gone green. MTI is here. We often see sort of in these big breaches, the MTX then drops back a bit, and the price drops back with it. Um, I would wait for this next step up. So what we often say is we want to see a stock come up, come back down, get boosted and supported by the 200, and then go back up again, or the 50, depending on which one it is. So if this, that you could say it got supported, and that's a really pretty candle there, because it's basically saying it's got a longer wick at the bottom than the top, which means the sellers have tried to come in, and the buyers have come in here and said, no, you don't. We think it's a great company. It's going up there. So if that holds and today holds as well, then actually, yeah, good stock.
We basically had 2 stocks at number 1. The one, Lockheed Martin, we already talked about in the beginning of the show. We used them as an example, but we're going to stay within the, as you can see from the little video here, we're going to stay within the military industry because Liam has said they're a big part of space in that sense that they have part of the company take care of it. And with RTX that we just showed here, that's our number 1. That's our best bet on a space stock because, again, purebred space stocks is hard to come by, especially if they need to make money.
Yeah, yeah, especially if you want to make any money whatsoever, or earnings certainly. Yeah, they're specialists in missile defense and things like that, but also in space communications, so very secure space communications, and they're also involved in the NASA exploration side of things. So their government contracts and their security clearances are one of their biggest moats in the space area. It is lower growth because of it. You're not going to see the stellar side of things, but you're going to take on less risk to buy these guys as well. So that's the great thing here. They are somewhere around, like Lockheed Martin, 16-17% of their business is pure space, and about 30 to 35% is linked to space in some way. So it's they're quite big into it. Again, from a playbook point of view, not quite as high quality, but it's still green. It's still sort of above the 60 that we generally look for. Earnings per share going up. The PEG ratio is even lower. That it was 2.4 with the last company. This one's 0.9, which makes me think when we see the valuation chart, it's actually going to be more undervalued, which is good. We'll see if my guess is right. Free cash flow is going up. Again, it's not quite as pretty set of charts, but it's solid, it's constant. And that's what we're looking for. We don't want volatility. We don't want surprises. We want that freight train that just carries on making money and carries on going up. So absolute valuation, as I suspected, we've got it's lower down in the wave here. So we can see here that the stock has bounced down here. We could even potentially move this down a little bit more, but with the SpaceX, for the last year or two, it hasn't really gone down there. So I'd hover it around where the analysts are at the moment. So worst case scenario, if it just carried on bouncing along this line, we'd see an 18-19% gain. Best case scenario, 65% gain, because that's where the sellers have been happy to start selling back in February, March. And then somewhere in the middle of those, 47, 40%, something like that, is an upside for Raytheon. So fantastic company. From a buy point of view, it could be getting close. So we've got a green on the MTI, which is our first indication. Next week still looking a bit rough for the weekly. We haven't got an MTX signal. If it can go up, drop back down, go up again for the next week or two, we could see this go green. We could see an MTX, and we could be off to the races, because this is the best opportunity of the 10 or 11 that we've had this afternoon so far.
We're going to end on, of course, talking about SpaceX. The IPO takes place on Friday, but when you buy the stock, what is it that you're actually buying? When you're investing in SpaceX, what assets and what business are included? Liam, we don't have a lot of time. I'm going to ask you anyhow. What is it that Elon really is selling us? Is it because I saw a headline that all of a sudden that, SpaceX might buy Tesla. Are we really just financing him buying his own companies like he's done?
All right. I think what they're looking for, what Elon Musk is looking for, investors that are going to buy like this and not really look behind the scenes, because they're valuing it at 1.75 trillion, 1.8 trillion, something like that. Other companies have done looked at the assets, the potential profitability of the companies that you put together. So things like Starlink, XAI, he's looking at the SpaceX, the rocket side of things, and what could come out of that. And effectively, the highest price that I've seen so far is about 800 billion, something like that. So effectively, if you're buying into a company that everyone else right now is saying it's not even, it might be worth half that at a peak. Starlink is the only company that's making money. And I would say that one of the big issues there is Elon Musk's political reputation. Yeah, whether you like him or not, he damaged the Tesla brand last year, and that could easily do the same. He was in the papers in the UK supporting one of the far right groups over here. That sort of thing is really damaging to a brand. So that's one area that I'd look at and say there are real risks there. Starlink itself has competitors coming in, and we talked already about places like Europe and the Far East saying we have to have that under our control. We can't just let another foreign government or a foreign company dictate that. So that's another risk to that business, and the only money-making business. XAI is the worst of the frontier models. So the Grok chatbot is what they're trying to do. They tried to sell it to the investment banks as part of the package for them to take on the underwriting of this deal, and the banks all said no, they couldn't use it. So they'd have to invest 20, 30 billion, something like that. You've got Terafab, which is creating chips and a big chip fab plant. fantastic idea. He thinks he'll get it done in 10 months and it will cost 8 billion, something like that. 30 billion in 3-4 years is probably the most realistic side of things. So that's a huge cash drain. You've then got space rockets. Yeah, they blow up quite a lot. That's really, really expensive. There's not a lot. At the end of the day, there's 75 billion. You've got 10 billion they're losing 10 billion a year anyway. You've got 25 billion going back in debt repayments. You've got other stuff coming out. They'll probably end up with 10 to 20 left to actually invest in things. What are they going to invest in? And that's what you're paying for. So for us, a bit like anything else with Elon Musk, he's a wizard. He's made Tesla float for years, and he could well do the same as SpaceX. So we think it will probably double in price over the next few weeks. Whether it can continue doing that, that's our big question, and whether you'll get left burnt by the end of it.
Two things I want to say. First of all, there's a lot of people who think that Tesla is part of this deal when you buy SpaceX. It's not. They
Nope.
might buy it. That's a different story. Point two, he put a Tesla in space. Well, that aside, what could the future growth look like, Liam, for SpaceX?
The future growth is all around XAI. When you look at the IPO documents, they're basing their value on AI going forward. That's going to be, and that's where the potential growth is. If they could spend 20 or 30 billion and get an absolute top-notch AI coming out of it, that is a bit like the Anthropic version, maybe, where they're focused on business and actually doing stuff that businesses and corporate enterprises want, then that is something that could grow really, really quickly. You look at Anthropic, they're worth 950 billion. You look at OpenAI, they're worth 865 billion. So that is a potential for that. Starlink is potentially huge. They could unseat every single cable internet provider out there. So there is a potential for that business. So the potential is huge, but it's a bit like it's a lottery ticket. It would probably be number 10 out of our lottery tickets because of that, because so much of it is based on Elon Musk saying, yeah, we're going to try and do that.
And a full disclaimer from here, none of us has signed up for buying the
No.
SpaceX stock. So in that sense, it's not a recommendation. If you want more about SpaceX, we have a deep dive video, a 40-minute video presentation in which Hans Henrik Nielsen, the other part of the founder of MyStockScanner, explains about SpaceX, about its business model, about the valuation investment potential. You can find it on our webpage, MyStockScanner.com. Liam, we took a full hour and then just a tiny tad. But the thing is that I remember that Houston, when they do a countdown, they can get to 13 seconds and say, we are at 13 seconds and holding, which means that's not 13 seconds left. They go overtime, just like we did right here.
So we can do another half an hour.
No. We could easily. I know you can explain everything to the moon and back. It's always a pleasure having you along, Liam. Again, tomorrow, 8 o'clock Danish time, standard Central European time, we're going to do a Danish webinar. I'm sure Hans Henrik will compete with Liam about doing it even longer. We shall see how that turns out. For now, Liam, always a pleasure. Check us out. Take a free membership at MyStockScanner.com. You get a free month and take an in-depth look into our space theme that's been running the entire week. You guys have a good IPO on Friday and have a good Wednesday evening. We'll see you soon. Bye.